Guys, welcome back to the channel. Today we're going to be going over market structure breaks or runs on liquidity. So we will start off by just putting in a theoretical bullish trend like so, with a series of higher highs and higher lows. And we will presume that we've had a shift in structure here. Now, depending on where this happens in the market will play a factor as to if we're going to be seeing a true shift in structure or not. Because as you notice, at the moment we have high low, high low, high low, high low, high low, high low. This is the first time we're seeing a high low being taken out of the market. Now, this could just be a hunt on on sell side liquidity before we do continue with the preceding trend, as we have not taken any sell stops and sell side liquidity in this current run up. So a big factor in determining whether this would be a true structure break or not is, go any further, make sure you check the link in the description for my free Discord group. I share all the trades I'm taking with everybody in there. I give my daily market analysis, my key levels and POIs, points of interest, everything that I'm looking at between euro, dollar, pound, dollar and New Zealand dollar. It's an absolute community full of killers. And like I said, it's absolutely free. Get in there while it's still open. Where does it come from on the higher time frame and how does it form? Strong structural points should form via a run on liquidity, via a strong run on liquidity, I will say. Something like this, we will see an aggressive run on liquidity and then a shift in market structure, followed by a higher low being put into the market. And this must come from a valid premium array. So, like I said, a trend shift is not confirmed until we get a higher low in the market, but we do not always need to wait for the higher low to be put into the market for us to take a trade, as it depends where this structural shift takes place. Let's just presume that this is coming from a valid bearish order block in a premium market, like so, and it's an engulfing. Let's just pretend. I hope you like my drawing, and we will color this in. Let's just imagine this is a really, really good colored in engulfing buy to sell candle like so. And we would have this order block denoted like so. And if we do get this shift in structure from this area, then we can presume that this is going to be a true shift, and we can look to take shorts from this area to catch the reversal. Now, if this happens somewhere down here, I will just redraw it actually. If we get the bullish trend going up and we don't hit our higher time frame premium level, a lot of times this can just be inducing traders onto the wrong side of the market to build some buy side liquidity for the smart money to pair with their orders when they're going to be selling up here, and then we will get the aggressive run on buy side liquidity into our high time frame premium array, followed by a true break in structure, and then we can look to get short from an area like so. I hope that makes sense. Now what we will do is look at some actual price action. I'll show you how you can decipher this in the charts itself. So here we have pound dollar, and we are looking at the daily time frame. And as you can see here, we are quite clearly in a downtrend, right? We have high, low, high, low, high, low, high, low, high. We take out a high here. Is this a shift in structure? Well, first of all, we would need to wait to see if we get a higher low put into the market, and we can also look left and see where we are trading. And in this instance, you can see that this low failed to take out this high. It actually just basically dropped a ton of liquidity, but for a later date, sometime in the very far away future. So realistically, do we want to be buying off of this structural low here, or is it just sell side liquidity? Because this low failed to take out this high, I would deem this as sell side liquidity. And if we get a shift in structure from this level, I would deem it just a run on buy side liquidity, pairing more orders, inducing buyers onto the wrong side of the market to then continue the bearish trend. And as you can see, we do not put in a lower high and we do not get a reversal. What happens next? We absolutely tank this low, as you can see. So we give that break in structure probably on the monthly time frame. And what do we always get after we get a break in structure? We get a pullback, right? Because we have high, low, high, break in structure, and now we need to put in a higher low. So we need to pull back and have a corrective move to then continue our trend. So as we can denote this as a monthly time frame break in structure, we can reasonably assume that we are now going to get a pullback. So also look at the aggression that they take this low with. They absolutely tank it and then they bring it back up so fast. Look at that. And this is about 400 pips, I think, from my knowledge. Oh, it's 1,000 pips. It's 1,000 pips. They just dump in the space of 1, 2, 3, 4, 5 days. They just absolutely tank cable by 1,000 pips. Absolutely mental. So then when we get this shift in structure here, we can start to be hunting buys. And reasonably speaking, you can start to be hunting buys when we get this internal structure, because this would be, a 15-minute swing structure. However, you do want to stop taking shorts after we do take out the sell side liquidity on the left, because we are going to get a pullback, and most likely the first one or first two or first three highs contained within the previous range are going to be used as buy side liquidity to then pair more orders in premium pricing for either a continued sell off or a complete reversal up into some levels up here. So we can, with a reasonable prognostication, assume that at least this high is going to be used as buy side liquidity after we take out this sell side to the left. So once we get this smart money reversal here, we can start looking for buys and trade the internal structure, right? We get a low, high. We can trade the pullback if we want from this premium area. Because if we draw a range on from here, we are in premium pricing, top 30% of the range. We can most definitely take the shorts, but just understanding that we will obviously want to hedge them with buys from discount pricing of this internal structural leg. So you would be holding sells from here and buys from this area and targeting buy side liquidity as take profit 1. And we also have a reasonable set of equal highs here as maybe a take profit 2. And once this happens, the cycle basically continues. You see we have a low, a low, a low, a low, a low, a low, a low. We run sell side liquidity. We drop equal highs, denoting that we have a weak structural point, and we take out or we give a break in structure. Or is it? Is it a break in structure? I would say not. Why? Let's dig into it. The first time that we took sell side liquidity was here, and we failed to close below the range. Let me draw this on just so you can see that. No candle body closed below. So this, to me, I would also deem to be a run on liquidity. And as you can see, we have a engulfing bearish candle out of the range and an engulfing bullish candle back into the range, and then a return into this sell to buy to take a long, which ultimately fails to displace above this high. So when we start to break down these internal structural legs here, we can reasonably assume the next target is going to be our weak structural point here before continuing to take on and hunt buy side liquidity this side. And here we do get a candle body close below. But the reason we would deem this to be a run on sell side liquidity opposed to a break in structure is because we failed to displace above this high. Had we closed above and we had considerable, what's going on here? And we had a considerable displacement, I will say, and we had a lovely strong candle body close above, that would then deem this structural point as strong and should be strong enough to hold price to put in a higher low to continue the trend. However, that does not happen. Up here, we actually build liquidity opposed to run liquidity and then give the break in structure. This is the important point to note. Do you remember what I said earlier in the video? That strong structural points should come from a strong run on liquidity like so, and they should be aggressive. And what do we have here? We have a strong run on liquidity and aggressive displacement away from it. And then we can see that price continues with the trend. And we can take buys from this sell to buy candle here, this daily bullish order block. We can take buys on the lower time frames down here and target these relative equal highs as our take profit one. So I hope that does make sense for you guys. If there's anything else you would like me to cover, let me know in the comments, and don't forget to join my free Discord. The link is in the description.